Hello everyone, it's Kate Hill from Adviseable Property Buyers. I'm here with Tina Howes from Smartmove, one of Australia's leading and most award-winning mortgage broking advisory firms. They specialise in residential and investment property lending, and I've come to ask Tina for an update on what's happening in the residential lending space at the moment. Tina, hi.
Hi, Kate.
So Tina, tell us a little bit about why it's important for property buyers to use a broker rather than go directly to a bank.
Many reasons, Kate. It's very easy to assume that all of the banks are the same, but fundamentally, as a broker, one stop and we'll give you access to over 40 lenders.
Yeah.
So each of those lenders have different pricing, they have different credit appetites, they've got different policies, different niches, and a broker's job is to understand your circumstances and your needs and match them to the right lender. It's very easy to walk into your lender that you've got your bank accounts with and assume that whatever they tell you can borrow is what you can borrow, and that the rate that they offer you is in line with the market. But it's not the case at all. I can tell you that banks will change their pricing each month depending on their balance sheet and what their appetite is for that particular type of loan that you're after. If you have bonuses, or if you're casual, or have a whole heap of different circumstances, every lender is going to be different. So that's probably the key point for using a broker, is that choice. The other one is speed. You may go out on the weekend, find the property of your dreams, but you don't have your pre-approval, and there were lots of other people interested in the property as well. My job is to know which lenders are going to give us a quick turnaround time. That might not be the most competitive lender, but it might be the lender that can help you secure this property. So that's probably the second key point. The third one I would say is experience. Having been an ex-banker, it's fair to say that somebody that works in a branch as a lender is quite possibly an entry-level lending position, whereas if you're dealing with an experienced broker, you might be dealing with someone that has over 10, 15 years lending experience, not to mention buying experience. Brokers tend to be able to hold your hand through that whole process.
Yes.
Right from the start to the finish, whereas the resource in the branches, they just don't have the time and the capacity to do that. They're juggling so many different things and sale pressures and targets. So that's what I think are probably the key reasons for using a broker.
Tina, we all know that a little while ago there was a Royal Commission into the banking and financial services sector. So tell us a little bit about what has happened since those recommendations were handed down.
Okay, so it's been a bit of a roller coaster of the last 4 weeks. What was originally a commission into the banking and finance sector ended up being a commission into the broking sector. You remember listening to the court cases day in, day out, and the reports that came out on the banks and the case studies was quite damning. But then when the report actually came out, it seems that the banks have come off relatively unscathed, but the focus has been on the broking industry.
Yes.
Brokers haven't really been too sure, and actually and consumers.
Yeah.
And anyone in the property sector haven't been too clear on why the focus has been on brokers, because so many good customer outcomes happen with the broking channel, and brokers are crucial for competition. So essentially we had initially some recommendations that would kill the broking industry, without a doubt. Removing trail, making consumers pay an upfront fee, regardless of whether they use a bank or a broker. Now that's ludicrous. I mean, at the moment, you don't pay to use a broker, and also if you go to the bank, you don't pay a large upfront fee. But suggesting that changes so that consumers have to pay this fee, what a great outcome for the banks, right?
Yes.
Not such a great outcome for you and me, that people that have mortgages, and not such a great outcome if you want to refinance your loan every couple of years and having to pay another large upfront fee. We got rid of heavy exit fees a while ago because it was anti-competition. So it just sounds like we've reinvented the wheel all over again. The Commission also wanted to remove trail. Now, trail essentially was introduced as a way of ensuring that brokers have the right behaviours. So if I said to you, Kate, I'll pay you $3,000 up front and then I'll pay you $2,000 over the life of the loan. as a way of ensuring that, you know, you're putting the client with the right bank, with the right solution, and you're looking after their needs along the way. But the Commission has essentially said, well, that $2,000 trail is gone. So we had the Labor Party come out and say, well, instead of that $3,000 up front, we'll pay $6,000 up front. So that's great. I'll take the $6,000 up front rather than the trail. But the whole point of having that trail was to actually make sure that the behaviours are right. So on the back of that, we've seen the Liberal Party only recently, a couple of days ago, come out and say, maybe we'll actually keep trail and we'll review it in 3 years' time. So it's all up in the air. There is uncertainty, but I think it's been widely acknowledged that brokers are essential for competition. They're essential for, you know, to give the small lenders that avenue where they don't have that wide branch network. So I do have faith that the outcome will be positive because it's been widely acknowledged that we need brokers.
Tina, tell us a little bit about what you're generally seeing out there in the lending environment at the moment.
Sure. I think it's fair to say the scrutiny and the challenges in getting finance are still there. That certainly hasn't eased up as yet. The single biggest challenge that brokers and anyone getting a loan at the moment is dealing with is the whole scrutiny on living expenses. Now, you just have to pick up the paper and read about, you know, lenders including Uber Eats and a whole myriad of discretionary spending that are actually impacting on your borrowing capacity. Now, just for anyone that doesn't actually understand how the banks assess how much you can borrow, it's essentially a factor of all of your income after tax, less all of your expenses and lending commitments and so forth. Now, the loans are using a higher assessment rate at 7.25%, where your loan interest rate might be under 4% or under 5%, depending on if it's investment or owner-occupied. But in addition, your living expenses, the actual figure that you're declaring, is being factored into that equation as well. Now, each lender is different in how they're assessing what that living expenses figure is. Quite a few lenders have moved towards the path of requesting 3 months bank statements and averaging whatever you've expended over the last 3 months and using that figure as your living expenses. Now, we all know that you have discretionary spending in there. There might be overseas trips. There might be eating out at restaurants, Uber Eats, you name it, extracurricular activities, you know, gym memberships, whole heap of things that the lenders are saying this needs to be factored in so that you can maintain your current lifestyle. So we're seeing some customers have to come back in 3 months' time, 4 months' time, once they've tightened the belts. There are still some lenders that aren't necessarily looking at it with that much scrutiny. But it's a little bit away before that logic will apply. But we are seeing some indication that that might be on the horizon. A report was released a couple of weeks ago that essentially acknowledged that all the recent additional due diligence that the lenders are doing on living expenses has been praised, but it's been acknowledged that around that discretionary item, that there's capacity for, you know, as long as it's obvious and it's, you know, documented that it's discretionary, that there might be some easing around that. Because you know as well as I do, if interest rates go up, or if you do take out a mortgage,
That's right.
Maybe you don't go overseas every year. Maybe it's every 2 years or every 3 years. You know, and that's the whole point about a budget. And that's something now that brokers are really needing to do with their clients, is sitting down and going through actual budgets and looking at what are you spending your money on. Let's work together at creating a budget and how are you going to work to stick to that budget.
Tina, are there any other trends apart from what you've just been telling us about that you are seeing perhaps with lenders or even the consumers out there?
Okay. Probably the first one that comes to mind, I'm seeing far more investors paying principal and interest.
Yes.
And that's because there is a difference now in the interest rate that the bank charges for an interest-only loan versus a principal and interest loan. To the point where when you do the numbers on what the principal and interest is versus the interest-only payment, the difference in cash flow is not that significant. So a lot of my investors in particular are saying, well, it makes sense, let's pay down the principal on the loans, particularly those that are rent investors and don't actually have owner-occupied principal debt. So that's probably one of the biggest trends. The second trend that is quite prevalent at the moment is that first home buyers are back. I'm based in Sydney, so we've obviously come out of a very heated market, and that heat has certainly come out of the market. You know, there are areas where it's still very difficult to secure a property, and there's still lots of interest. But as a whole, I would say that first home buyers are feeling less intimidated.
Yeah.
Auctions are off the table quite often. Cooling off periods are back on the market.
So you're sensing that they themselves are sensing more of an opportunity.
Yeah,
out
absolutely.
there.
Yeah, they're certainly seeing value in properties at the moment. You know, ignoring what news.com tells us that the world's going to die. There's a property market crash happening. But no, they're seeing that it's a good time to actually secure a property with less people looking, but and then able to get that cool off period so they can formalise their pre-approval, which is really important, particularly if they're in that mortgage insurance territory. Get their valuations done, and just take the pressure off a bit.
Yeah. Thank you very much, Tina.
That's okay. Thanks, Kate.
Whether you're looking for a refinance, a new loan, or simply a financial health check, Smartmove can help you. They have a strong relationship with a panel of over 30 lenders and can get your finance moving. So contact Tina today.